Hi all, this is Ashish Kyal here. Welcome again to Eliot News channel by wavesstrategy.com. And I'll be talking about how to trade Nifty in the ongoing volatile market. We have seen a strong fall from the levels of around 10,900 levels, and then it went to as low as 10,530. That was a very sharp and sharp fall on the downside. Post that, market has again showed a very sharp reversal on the upside, gaining from 10,530 to around 10,880, 900 odd levels in a very short span of time. So this has been the nature of the market over past many weeks now. If you look at markets, it has been moving all over the places, but within a range. So it has gone to the levels of 11,000, and on the downside, it has gone to the levels of 10,300. So that's a very big range for Nifty, but it has been moving in this big range. So let us try and look at the charts, how to trade during such kind of a movement. If you look at this chart right now, which is of Nifty, you can see that there was a very sharp fall from the levels of 11,800 on the downside. Nifty touched around 10,000 mark, and post that the entire movement is in an overlapping fashion. There is definitely no clear trend right now, but it's in an overlapping fashion. I still think that we are in a topping process. I was expecting the fall to be much more steeper and faster, and we will crash very sharply. But what has happened after the current reversal, it only indicates that the top is going to be formed, but only after a few more days of the distribution gets completed. So the current movement which is happening on Nifty looks like a classical distribution. If you look at it, the entire zone over here, which is ongoing, you will see that this is nothing but a distribution. A fall which was a very strong fall on the downside is taking so much of time in order to retrace even 61.8% of this fall. So that's a very, very simplistic way to look at what is the medium term trend. If you go on a daily chart, and if you look at if you zoom in and try to look at what is happening on the daily chart as well, we are not moving in any kind of a trending fashion. When you are looking at such kind of a movement, the best indicator that you can apply is probably the Bollinger Bands, because Bollinger Bands are the ones which gives you the support and resistance when prices are moving in a range. So if you apply Bollinger Bands on the daily chart, you can clearly see that the bands have gone absolutely flat, and the low of 530 which was made was exactly on the lower end of the Bollinger Bands, from where we saw a bounce back happening. The resistance of this is now near the zone of 11,038 on the upside. So for a trend to emerge, we need a very decisive break above 11,050, and that is also the 61.8% retracement of the entire fall. So crossing 11,050 is going to be a challenge. It's not going to be an easy task, and I think we might be topping out soon around the zone of around that zone. And once we top out, the reversal on the downside is going to be very sharp and fast, and that will happen along with the global markets. Yes, Dow Jones have started the big trend on the downside. The sharp correction that we saw on Dow Jones has been after 10 years that we are seeing such magnitude of sell-off. Nasdaq has entered into bear market, and it has been officially declared to be entered into bear market because it has fallen from the top by nearly 15 to 20%. Nikkei Japanese index is also being declared to have entered the bear market. So that is the phase where the world developed economies are entering into bear market. The developing economies cannot move in isolation. So slowly and steadily, once the distribution which is currently ongoing gets over, we are going to turn on the downside. So for an investor, it is important for you to keep a watch on the important levels. In case we are managing to break above 11,100 very, very strongly, then the uptrend might extend further. But I have my think that we are going to go down, and it's going to be very sharp and fast fall when it starts. Over short term, yes, if you look at the hourly chart, over short term, there is going to be some positivity that cannot be ruled out, but you need to be very careful in the ongoing short term movement, because the prices are just creating overlapping structure. There is no clear trend that you can expect on the upside, and it's not going to be a one-way traffic. It's going to be meeting with lot of resistance as and when prices inch higher, because there is a lot of supply. So if you look at the previous high, 10,985 is the supply zone. Again, here is 10,940 is the supply zone. So that is the zone where we are going to get a lot of supply on the prices. Also, one very important aspect is, if you look at the structure which is circled and highlighted here, if you look at it very closely, we are forming a diametric pattern, I think, because there has been an expansion and now we will start seeing some kind of a contraction on the chart. So if we are seeing a contraction on the chart, we will start expecting a non-trending behavior. A very specific stocks are going to participate in this kind of a non-trending behavior, and it's going to be a challenge at least for next few days until we start breaking the important support levels on the downside. These important support levels I'll be mentioning in the daily equity research report in the morning, and you can get access to that equity research report to understand the crucial levels based on which you can derive the trade setup and then also trade based on that. If you are an intraday trader, there can be some pockets where you can look at the stocks that are outperforming, the stocks that are showing a very strong momentum. You can probably start applying Ichimoku Cloud. I have started doing that and it has done wonders. If I have to do an intraday trade or probably short-term trades, those are providing excellent opportunities. You can try and look at that. We have been generating Nifty, Bank Nifty intraday calls, or probably the calls that extend to the extent of 2 days, and it has again working out amazingly well. So it is best to keep learning, keep evaluating what is working in the current market and keep applying those techniques. From the wave perspective, I think we might have completed wave F on the downside, and the move on the upside which we are currently witnessing is wave G. This wave G might consume a few more days, and post that, I think after the G is complete, we are going to start a big trend on the downside. The euphoria is started to build up again. Everyone is expecting extremely bullish scenario, but I think this is only a temporary bounce back. Even on the US Dow Jones index, if you look at it, we saw 1,000-point rally in a single day, which is a historical point-wise rally on Dow Jones. But that kind of movement is only temporary. Next day, we saw again a sharp correction and the sharp rally. So that clearly shows the rally which is happening was only a very temporary pullback on the upside on Dow Jones. Probably wave X is ongoing. Post completion of wave X, the next leg of set of correction is going to start on the downside. So trade cautiously. January as a seasonality is known as a month for where the major tops have formed time and again, and this time as well it looks like going to be no different. So January we are going to start seeing some kind of a major topping, a major top in place, and post that a correction is going to start. However, right now the support levels are protected, so do not short the market as of now. Look for the support to break down, and as soon as the support is taken out, you need to be very quick in entering the market. Otherwise you might again miss out the move. You need to be quick in this kind of a scenario. In this kind of markets, you need to be very quick in entering and exiting the positions. Otherwise you will end up losing on a winning position. It's a very important strategy. So the traders who are reading the research report entered short around 10,850 to 890 levels. Markets went all the way to 10,530 on the downside, and you have to keep booking partial profits and keep trailing the stop loss. So they ended up making something out of the table. They are taking out something out of the table and book profit. So you need to be quick, fast in changing the stand. If you are hesitant and wait for just a day or even few hours, not even a day, then the markets will punish you. So stay tuned. It's going to be a very interesting next year starting in 2019. It's going to be very volatile. 2019 is going to be different than what 2018 has done so far, and the volatility is going to be on the rise. That's it from my side. This webinar will be again available on wavestrategy.com. Stay tuned and keep watching it. Wish you all a very happy 2019, and as and when it arrives, I'm sure you might be more glued on the screen and the news channels, because 2019 is going to be the year that we are probably seeing after 2008. It's not very often I come out that strongly, but 2019 looks like to be the year which we are going to witness only after 2008. 2008 crash everyone is aware of, and 2019 will again go back in history. So look at that, and wish you all a very happy new year coming, and see you again same time next week on a Friday at 4. Thank you. For any queries, you can get in touch with us on 9920422202. You can subscribe to the Momentum Research Report or intraday calls or Nifty Bank Nifty calls that are going amazingly well, and get access to that. You can also write to us on helpdesk@wavestrategy.com or visit the website wavestrategy.com. That's it from my side. Have a wonderful weekend. Thank you.